Good morning, everyone. This is Marshall Gidler bringing you the morning comment for April 2nd. The U.S. data was weak, no doubt about it. The ADP employment report missed expectations and came in below 200,000, while the ISM manufacturing PMI fell to a two-year low. Benchmark Treasury yields ended down 2 to 7 basis points, while Fed funds futures pricing continued moving more dovish, with greater downside risks to Friday's employment report now seen. Nonetheless, please note that a weak ADP report does not guarantee a weak employment report, as the ADP report actually has a pretty poor record at predicting the NFP. On the other hand, the very strong run of job gains seen in recent months is looking increasingly disconnected from many other indications of slower economic growth. Thus, it would be reasonable to see some payback in the March report, too. Against this background, the dollar's performance was actually quite impressive. It's opening unchanged to higher against most of the G10 currencies this morning, although lower against the bulk of the EM currencies that we track. The steady performance against the G10 shows that the end-period buying we saw earlier this week is not just a seasonal pattern. The big losers were the Swedish krona, which has been notoriously weak recently, and the Australian dollar, which continues to fall as expectations mount for a rate cut at next week's RBA meeting. The market now sees an 84% probability of a cut next week, i.e., they think it's almost certain. Today's Australia data was fairly disappointing, too. Job vacancies rose at a slower pace in February than in January, and the trade deficit widened out considerably. Plus, our old favorite iron ore prices continue to decline. Now, milk prices are falling too, but the monetary policy outlook for New Zealand is diverging from Australia, and that's supporting the Kiwi relative to the Australian dollar. I still see Aussie Kiwi headed to parity. The dollar did decline against the Canadian dollar and Norwegian krone as oil prices surged on news that U.S. oil output declined for the first time since January. That probably caused some short covering in this shortened trading week. However, I still remain bearish on oil. The U.S. seems determined to reach agreement with Iran, and besides, I expect U.S. production to increase in June. So I remain bearish on CAD and NOK medium term. Today's highlights: during the European Day, the minutes of the ECB Governing Council March monetary policy meeting are released. In the UK, we get the construction PMI for March. Coming after yesterday's strong manufacturing PMI, the construction PMI could boost sterling. In the US, a good initial jobless claims could overcome any lingering fears from the weak ADP report. We also get revised figure for the initial jobless claims for the period from 2010 to 2014. Trade balance and factory orders, both for February, are also due out. As for the speakers, Fed Chair Yellen and Fed Governor Brainerd will speak. Yellen will simply make the opening remarks at a conference on economic mobility, so I don't expect any great revelations from her. For more information, including technical analysis, please read the comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gidler, head of Global FX Strategy at IronFX Global, wishing you solid trading.